Australia's new car industry has had one of its worst years in decades. Darren Mara joins me now in the studio with more. Darren, just how bad was it?
Ricardo, the industry employs around 60,000 people in Australia and the coronavirus pandemic hit it hard. The Federal Chamber of Automotive Industries says just under 917,000 new vehicles were sold in 2020. That's a 13.7% decline and the worst in 17 years. SUVs, as you see there, accounted for nearly half of all vehicles sold, although fewer rolled off showroom floors. The highest selling brand was Toyota, with a market share of around 22%. The industry is seeing an improvement, though, with sales picking up 13.5% in December. Electric and hybrid vehicles only make up 7% of sales, excluding Teslas, but the sector sees those numbers growing.
We will see the price of the battery come down dramatically. We will see the range of the vehicles increase, and the refuelling stations for electric vehicles will expand. So I think the market will respond, and inevitably Australians will drive electric vehicles in large numbers.
And Norway has become the first country in the world where sales of electric cars overtook those of petrol, diesel and hybrid engines. Just over 54% of all vehicles sold in Norway last year were battery electric vehicles. That's up from 42% in 2019 and just 1% a decade ago. The country aims to be the first to end the sale of petrol cars by 2025, and it exempts fully electric vehicles from taxes on those that rely on fossil fuels. Well, one important element in electric vehicles is lithium. It's a key component in the batteries which power the cars, and the share prices of some lithium players have surged this week after a Chinese manufacturer signed a 5-year supply deal with Tesla, pointing to future growth in the industry. And while the lithium price is being supported by excess demand, oil is being pushed higher by shrinking supply. Overnight, the commodity jumped to a 10-month high, as you see there, to above $50 per barrel.
We had OPEC Plus, which is, Russia and Saudi Arabia. They get together. It's a bit of a consortium they have there, and they put together a supply output agreement in which Saudi Arabia would actually cut the production of oil by 1 million barrels a day. That's seen the price of oil tick back up over $50 US per barrel, and as a result, we've seen some of the energy stocks today start to perform fairly well.
And the best was Oil Search, which also topped the 200 list today, up 5.7%. Elsewhere, the miners reversed early gains and NAB led the falls among the major banks. All up, the Australian share market fell 1.1% as investors await the result of the US Senate runoff. The Australian dollar is stronger against the British pound, New Zealand dollar and the Chinese yuan. And just take a look at how it's up against the greenback, 77.7 US cents. And that, of course, continues a trend upwards that began in late March before the onset of the first wave of significant COVID restrictions. Now, our currency is now at its highest level since April 2018. Australia's response to the pandemic, strong iron ore prices and a weaker US dollar helping drive the rise.
For import-intensive sectors like retail, it's actually quite a good thing. And usually for households, it's a good thing when the Australian dollar rises because Australian households go on holiday and it's a little bit cheaper if the Australian dollar is higher. But obviously borders are closed right now and really we can't take advantage of that.
Now, a higher dollar hinders our exporters because it makes their goods more expensive overseas, although imports like cars should be cheaper. What's not cheaper at the moment, though, are used cars, up 35.2% in December compared to a year ago. That's according to the Datium Insights and Moody's Analytics. It's the strongest result in 21 years. And that's because many Australians have been shunning public transport during the pandemic, Ricardo.
Thanks.